Something just flipped on the Shiba Inu chart that nobody saw coming. A whale that had been completely silent for over 2 months just woke up and pulled 65 billion Shib straight off a South Korean exchange. And that is not even the most important thing happening today. What is happening and what on earth am I even talking about? Well, let me explain. This content is provided for informational purposes only and should not be considered financial advice. Market conditions can change over time. Right now, on February 27th, 2026, there is a technical structure building on the Shib chart that has historically preceded some of the most explosive price moves this asset has ever produced. And as of today, a market analyst posted a fresh TradingView breakdown pointing at a potential 448% surge for Shib. That number is not speculation pulled from thin air. It comes from a very specific pattern forming on the chart right now. We are going to walk through all of it, but before we talk about the fireworks, we need to talk about the fuse. Look at the Shib chart right now. According to reports, what you are seeing is a falling wedge, and if you do not know what that means, here is the simple version. Imagine a funnel being squeezed from both sides. The top line of the price is falling. The bottom line is also falling, but much more slowly. They are converging, they are tightening. Every single day that passes without a breakdown, the pressure inside that wedge builds, and falling wedges, when they resolve, almost always resolve to the upside. Here's the thing. On-chain trackers indicate the 26 EMA is sitting directly above Shib like a ceiling right now. The 26 exponential moving average, that is just a smoothed out line that tracks the average price over 26 days, has been acting as resistance. Every time Shib has nudged up toward it, sellers have knocked it back down. That is the pattern that has frustrated every bull in the community for weeks. But here is where it gets interesting. The falling wedge and the 26 EMA are converging at the same point. That means when Shib finally breaks through, it will not just clear one barrier. It will clear both at the same moment. And that, historically, is when things move fast. The RSI, which stands for Relative Strength Index, is currently hovering near the 30 level, as per recent analysis. Think of the RSI as a temperature gauge for buying and selling pressure. Below 30 means the asset is deeply oversold. It means sellers have been in control for so long that the energy is exhausted. And when that exhaustion tips over, the reversal can be sudden and violent. Analysts note that Shib sitting at RSI 30 while inside a tightening falling wedge is the kind of setup that makes experienced chart readers lean forward in their chairs. Now let me tell you about the main event, the thing that dropped today that changes the entire conversation. Market watcher MMB Trader published a fresh TradingView analysis today, February 27th, laying out a structured case for a Shib comeback. And the targets they put on the chart are extraordinary. According to their analysis, as per recent analysis, the initial breakout target sits at a 3 times move from current prices, pointing toward 1,678 units. But that is just the beginning. MMB Trader then maps out a second wave target of 448% growth from current levels, pointing to 3,364 units per Shib. And if momentum builds from there, further take profit zones are identified at 5,480 units and even 7,746 units. These are not random numbers. Tracking platforms indicate they align with prior resistance zones where supply overwhelmed buyers in previous cycles. The logic is precise. The setup is based on a multi-year accumulation base forming at these exact price levels right now. The key insight from this analysis is the structure. Shib has been hammered down, but researchers point out it has been holding above a critical weekly support zone that served as a floor in prior cycles. Volatility is compressing. Selling pressure is losing its force. And the analyst argues that when compression reaches its apex inside this wedge, the resolution could be rapid and powerful. Because breakouts that come after long accumulation periods tend to explode, not creep. And get this, right now, the on-chain picture is giving mixed signals that are actually very informative once you understand how to read them. Blockchain analytics show that approximately 549 billion Shib flowed into exchange wallets over the last 24 hours. That sounds alarming at first. Exchange inflows typically mean tokens are being moved to sell, but here's the kicker. Right at the same moment those tokens were moving in, a completely different signal appeared on the other side of the ledger. A South Korean whale connected to the Coin One exchange just made their first on-chain move in over 2 months according to market data. On-chain trackers indicate that wallet address 0x9D9F823 withdrew 65.244 billion SHIB directly from Coin 1. That is a withdrawal, not a deposit. That is a large holder pulling tokens off an exchange, which means they are moving them into cold storage or private custody. Moving tokens off exchanges is the opposite of preparing to sell. It signals holding conviction. And data reveals this wallet currently sits with a total accumulation of over 1.616 trillion SHIB. 2 months of silence and then a massive withdrawal today. That timing is not random. What makes this whale signal so compelling is the history. Industry watchers note that this wallet has only ever made withdrawals. Every single transaction over the past 2 years has been a SHIB withdrawal from the same exchange. This is not a panic move. This is someone who has been calmly, systematically accumulating and holding one of the most discussed assets in all of crypto. Now, let us zoom out and look at history. The setup unfolding right now bears a striking resemblance to what played out in the months before SHIB's first massive breakout in mid-2021. Back then, the token had been range-bound for a long period. Volatility was contracting. Sellers appeared to be in control. The asset looked broken to most casual observers. And then the wedge resolved, and SHIB moved in a way that nobody who was not paying attention was prepared for. The compression phase was the setup. The breakout was the result. Sources suggest SHIB's lowest point in this cycle hit just 507 units on February 6, 2026, and since that low, the structure has been quietly building higher lows, exactly the kind of behavior that precedes a real reversal. The community feels it too, and the community has always been one of SHIB's most underrated catalysts. The Shiba Inu team has continued developing its ecosystem through these price pressures without flinching. Shibarium, the layer 2 network that reduces transaction fees and increases speed, is undergoing technical upgrades. According to reports, a fully homomorphic encryption privacy integration is confirmed for Q2 2026, which would bring on-chain privacy features to Shibarium and make it competitive with dedicated privacy chains. This is not talk, it is a scheduled upgrade with a confirmed timeline. And significantly, community sources report that T. Rowe Price, the traditional investment management giant, included SHIB in its proposed active crypto ETF filing. That level of institutional acknowledgement does not happen without serious due diligence. The dream is alive. The community knows it. The whales are positioned, the chart is coiled, the analysts are watching, real accumulation, real structure, real potential. The question now is simple. Do you want to be the person who understood what was building before it happened, or the one who searches for entry after the breakout is already on the news? Drop your SHIB target in the comments below. Where do you think this goes if the wedge breaks? And click on one of the videos on screen right now. For more, turn on the notifications bell, because missing a critical update on SHIB at a moment like this could genuinely cost you. And share this video with everyone in your circle who is watching this space. They need to see this.